Hi everybody, it's Christian from Serene Education. Going to be looking at the four majors for the following week, which is the 26th to the 31st of July 2015. Starting with the four majors, going with the four majors, let's start with the euro against US dollar. Starting with the weekly time frame, I just want to have an idea of what happened last week and what it could do for the following week ahead. So euro against US dollar on the weekly. Let's have a look at the last week's candle. This candle right here on the hard right edge. You'll notice we've seen a pullback. We saw no further selling after the prior weeks of negativity. And that negative candle that we saw 2 weeks ago actually broke below a support level that stretched back almost 2 months. So break below the monthly support and resistance level here, which happened to be a price support and resistance level in the past. So I just let's draw a nice strong support and resistance level there just to give you an idea. There we go. So it really stands out. So 2 weeks ago, bearish engulfing candle. A lot of selling through that, a lot of negativity, breaking below that current support level of price. And then this week, or last week, in fact, we were looking to see further lows on that bearish engulfing candle, this candle over here. We wanted to see further lows. And what we would want to have seen is Monday, Tuesday, Wednesday, Thursday, Friday of last week, the daily candle closing low to confirm that we're seeing further genuine selling with momentum. That failed to materialize as we saw no further lows through last week's trading. In fact, we saw positiveness for euro against US dollar, and that pushed price higher, but higher back into what is a prior support and resistance level. That's still right here. So the overall bias, we're still seeing continued consolidation. We saw it change to further negativity over the past a couple of weeks ago. We saw a pullback. So what tends to happen 90% of the time is when we see a breakout, we tend to see a pullback. A breakout of a major support and resistance level, we tend to see a pullback, a sharp pullback to the breakout area. In this case, we can see that around that 1098 level, as long as price now remains below that level, so below the major support through May, June, now we've got to see July actually maintaining below that support and resistance level here at 1098. You can see the moving averages all above price. The big one over here is even on the template, we do have a blue arrow. You'll notice that the candlesticks are still red. So there's still negativity in this particular pair. Even though we've been going sideways, there's still negativity in play on this particular pair. So it tells me that we're seeing consolidation, what is still very much a negative movement for the euro against US dollar. So here, we've got to see new lows, and we haven't seen a new low now in 2 weeks. So it's imperative that if we are to see any further continued lows through the second quarter of this year, we need to see the current support and resistance level here, or the 2-week low at 1090 being broken before we can actually see price even attempting the lows that we saw back here in March of 2015. Okay, so this coming week and the weeks ahead, got to see new resistance at the price support and resistance level here at 1098 as capped to continue that resistance, and then we could look towards the breakout of the support that we've seen over the last 2 weeks as our first concern or major requirement before we see any further opportunities to the downside. So looking towards this week, got to see a break. If we go down to the daily now, you can see we've had we saw that Monday, Tuesday, Wednesday, Thursday, and Friday, we saw nothing but highs instead of lows. We were looking to see further lows. That's what we needed to see going into the start of this last week. In fact, we failed to see that as price failed making new lows. Therefore, there were no genuine selling opportunities in what is still a negative trend. So you can see price now on the daily moving back into that major support and resistance level, the 2-week support and resistance level. We've got to see that level now maintaining resistance if we are to see any further selling opportunities for euro against US dollar. Let's go on to sterling. Let's start with the weekly just to see how the week's panned out. You can see that over the last 3 weeks or so, we've seen no new lows, and we failed to see any new highs with confidence. So here again, like its European counterpart, we've had a major pullback since the April lows. Okay, the April, March lows, we've seen nothing but moves to the upside. We saw some nice tweezer bottoms or bullish engulfing candles to tell us that there's no further selling in this. We should be looking to the highs. And then we saw the institution moving average acting as a clear resistance level of price. We saw a pullback, a reattempt of the institution moving average, and a pullback yet again. But we've not seen price actually falling lower over the last couple of weeks. So the bias, even though we're not seeing any genuine positive sentiment for sterling at the moment. Now it's still consolidative. Okay, we haven't seen a new low over the last couple of weeks, where the 20-period moving average has done a great job of actually supporting price. But you can see the body candles themselves all happening around a specific area. So we would want to see if this is still to be negative sentiment, then we would need to see that being broken to start with. So we would need to see a nice weekly bearish engulfing candle close lower, and then we could target the lows that we saw back in May, for example, on this morning star formation here, before we see the April lows being attempted. But saying that, we've seen a lot of positive data coming out for sterling over the last couple of months or so, which has put more bias for sterling's strength. But we've also seen in the same space, we've seen a lot of positive US data recently. Well, it's actually been mixed, to be honest with you. But you can see that sterling has actually made some ground against it. So if we are to look for any further positive data intraday, we need to see the current resistance level highs of last week being broken. So anything above the Monday, Tuesday, Wednesday, Thursday, Friday. So you can see here a lot of pullbacks. So we need to see price trading well above the 1565 level before we can even contemplate looking for further highs. Or elsewhere, you can see a bearish engulfing candle that we saw on Thursday, taking out a lot of last week's consolidation sentiment at the resistance level from the prior week. And we could potentially see price now moving back towards an institution moving out on the daily. Clearly, you can see the indicator box mixed. So here we need to see some sort of direction. Sterling, we need to see direction. So therefore, look at the fundamentals to see if there's any directional change. Tuesday, very important day for sterling because we have GDP quarter year-on-year figures for the second quarter, and we also have GDP quarter-on-quarter Q2 figures, and both of them, well, the year-on-year looks for a slight contraction of 0.3%, but the quarter-on-quarter figure for GDP, we're seeing a hike of 0.3%. So mixed results there. Be interesting to see how those figures come out. But we all know that we need to see strong GDP quarter-on-quarter figures, regardless of their year-on-year or month-on-month, or quarter-on-quarter, apologies, because that shows that there's strength within that currency. So very, very important figures coming out on Tuesday that will give us some sort of idea or bias of how sterling is going to progress for the second, third, and fourth quarter of 2015. So vitally important. Look to the fundamentals on Tuesday in particular to see how that's going to maintain the upside. Ideally, if your sterling is genuinely positive, we need to see positive quarter-on-quarter figures. If it's positive and we don't see positive quarter-on-quarter figures, then there's going to be a total change in market sentiment going forward. US dollar Swiss franc, a lot of positive strength on the week prior to last week, but you can see that we saw hesitation coming into last week because we saw more people taking profit. Hence the reason why we saw a major pullback in the candlestick, a lot more wick to the downside, and no new highs. Okay, so price hovering around the prior 2-week high level. The overall bias on here is US dollar strength against the Swiss franc. A nice bullish engulfing counter breakout 2 weeks ago after 2 full consecutive weeks of indecision at a major support and resistance level. You can see that all the moving averages are below price, supporting it, including the most important one, the institution. You can see the indicator box over here is predominantly blue, so our bias should still be looking for bullish upside movement. We could look towards the January high or the December 2014 high, or the low in January because of that major move in the market because of the Swiss franc move. But you can see that we haven't seen any new lows recently over the last couple of months, which has pushed price back to the upside. We've seen a break of a consolidation level over here being broken recently on 2-week breakout, bearish engulfing breakout. Now we need to see price kicking on. If we are to see the 2 week ago bullish breakout, we need to see a continuation. And we saw last week putting back, and it's similar to what happened on the euro against US dollar. Hence the reason why there's a correlation between the two. We saw a bearish breakout 2 weeks ago on the euro against US dollar, and we saw last week a pullback or a breakout consolidation pullback, still under the major support and resistance. It's the same here with this particular pair. We saw a breakout, but we saw most of last week seeing profit taking or pullbacks. But by the end of the week, we saw prices now closing higher than the prior week. So now looking forward, we've got to look for further highs. So look for further positive US data to come out this week. Have a look at the fundamentals out there to see if there's any major news announcement that could particularly push price higher. Let me see, on Wednesday we have the interest rates announcement. Interest rates, everybody's getting itchy and scratchy in the US because they want to see what Yellen's going to do. There's been talk about interest rate hikes. When's it going to happen? This quarter, the third quarter, fourth quarter, when? They need to see interest rates moving higher now. And a lot of the Democrats and Republicans out there in Capitol Hill getting a bit itchy and scratchy. There's been a lot of talking points over the last couple days, last couple of times that the FOMC have got together. Yellen in particular has been scrutinized because of interest rates. That's got to happen. So could we see a change this week in terms of the Fed interest rate decision? FOMC statement as well coming out at 7 o'clock GMT that same day. So look towards that Wednesday for that telltale sign of potential upside movement. Interest rate, we've got to see them. So if we'd like to see a continuation to the upside, look to see if there's any data that's coming out this week that's going to actually reflect that bias going forward. So just drop down to the daily. There we go. We still get a buy signal, but you can still see that prices failed to make a new high. Okay, so we had Friday, Thursday, Wednesday, Tuesday, Monday. So we failed to see price making any new highs compared to last week's Monday. We need to see that happening at the moment now. It's consolidating in what is a very much positive uptrend. Okay, so got to see 9645 being breached to see any further opportunities to the upside. And if that takes place, then we could be looking at potential levels here at 98137 and ultimately back up to those highs we saw in March at the 10094, just above the 1000 level. So here again, be patient, wait for the confirmed break with fundamental data, positive data for the US market, and then we can look to trade the outcome. Last pair, the US dollar Japanese yen. There again, we're just panning. You can see 2 weeks ago we had a nice bullish engulfing candle after a lot of indecision candles, a full month of indecision, price pulling back. But you'll notice that price pulling back to the 2014 high and the March 2015 high. We had a breakout, now we've had a pullback. We've seen a lot of indecision candles, but that indecision or that hesitation still maintaining above the all-time major support and resistance level highs, which is the 2014 high and the 2015 high. So breakout, pullback. Now we see continuation. So a nice bullish engulfing candle 2 weeks ago. But saying that, we failed to see any new highs last week, and that's what we need to see. So are we going to get it this week, potentially with Fed interest rates announcements? Got to see something out there from the US market that's going to actually push price higher. We have interest rates announcement on Wednesday. We have on Thursday, we have GDP quarter-on-quarter figures. They're expecting a fantastic quarter-on-quarter figure from a negative 0.2% to 2.6%. That'll be very, very, very strong data for the US market against most of those crosses out there. So if that comes out anywhere close to that forecast, you're going to see very, very positive movement in the market. The GDP price index from 0% to 1.5. There again, another strong index. Initial jobs claims. That is one at sticking point at the moment because it's actually rising 10,000. So from 255,000 to 264,000. Not a great figure to have. We would like to see that obviously being a lot lower. But I think the most important ones are going to be those quarter-on-quarter figures to start with, to really, or the interest rates announcement on Wednesday, then the quarter-on-quarter figures on Thursday. So look to the fundamentals, guys. That's going to be the key points this week, especially for a strong sterling and for a strong US dollar. And if we have those figures both coming out positive for those two particular pairs, then we should be looking at trading sterling crosses and we should be looking at US dollar crosses. Okay, vitally important. Start thinking clever instead of looking elsewhere. Think how it could have an impact. These two data points, impact news announcements could have on these two particular strong currencies for 2050. Please just think cleverly. Okay, traders. A smart trader is one who thinks cleverly and how they can interact, how certain pairs can interact with other pairs, and that's how we should be thinking. There's a lot to trade out there if you know where to look. Okay, very, very important. So have a fantastic week ahead. Keep it simple, and most importantly, trade serenely.